Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no.
Hi and welcome back to The Conscious Day Trader. I am Yanis, and today it's a very, 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 very good day because I had my first 10K month trading a prop firm funded account, 125,000. And if we jump onto my journal, you can see we're currently sitting on all green days in January, and that's without trading on the 12th and the 19th. One day I was getting married, and the other we were traveling to Denmark. So we still have the 30th, so a little bit more to do, averaging 3,000 a week, 2,000 there, 2,000 and 3,000 on this week roughly. So super happy with my 2023 start of the year, trading ICT concept, mainly the London kill zone. And today I'm going to show you my trades that I took on the pound dollar, and they were for let's quickly jump onto the MT5 to show you today's profits. And I've turned on the trades so you can see roughly where I entered and then exit the trades. And we made $472.50 after commissions, that is, on the MT5 5%ers funded account. So what we're going to do is jump into the trading view. And sorry, I'm a bit excited about hitting the 10K. So today you're going to have to bear with me. This is Excited Yanis version of analyzing the charts. We have gone on to our daily like we normally do, and we have placed our daily bias. The way we do that, if you're new to the channel, is put the red line, which I've labeled previous daily high, onto the previous day. So that would have been the 27th today, so the 26th on the previous high there, and the green on the previous low. Equilibrium is the 50% of that range. So you can identify that by putting in the Fibonacci and taking the line into that line there. So that would be your equilibrium, or 50% of the move. Anything above this price is deemed as expensive, anything or premium price. Anything below that line, it would be discounted price. And ideally, if we want to be shorting, as we always say, we want to see the price taking out the previous daily highs so we can fade it into the equilibrium, or taking the lows into to take it even higher. As I've been saying in previous videos, the 125 level is a target for me. I think that the price will be wanting to come at this 125 level. Also, we have this here, if you can see, is on 12994, pretty much on 125, and you have these equal levels here, which gives me an indication of buy side liquidity above this area. Obviously, the obvious moves that the price would want to go if we reach that is taking out liquidity here and filling in the left side of these fair value gaps on the left side here. But in terms of daily, like we said, we had the beginning of the week, and as you can see on the 26th, we had the green candle here, and we've had from a Monday, we had a down red, took out the sell side liquidity that we were talking about, fulfilled a fair value gap on the 1 hour, if you remember. Let's see, Monday, Wednesday, Tuesday, Monday 23rd. So this fair value gap here was filled, and then it came all the way up, and now it's created these sort of waves of the market coming and pushing down. Now, if the market didn't break the low of the previous, which would be my sell side liquidity here on the hour, and that would be sell side liquidity, I was happy for the price at a discounted price to trade it back into equilibrium. And the reason is from the price has been coming down from the 12 o'clock midnight time London, and then it's came below equilibrium. So I was interested because it came in line with my bias of being long. So now what I could have done is wait for the sell side liquidity of this bottom level here to be taken out. But there wasn't a lot of fair value opportunities on the left side that the price would want to go and take out or fill. And this sell side liquidity it wasn't a possibility for it to come down, and I was planning for it. But I did have a plan in terms of if the price wanted to go higher and not break the previous daily lows before it hit equilibrium. And that was my play. I wanted to trade see the price in the open come lower, so then I can trade it up into equilibrium. And if we go on to the 15-minute, and this is 7 a.m. this morning, so this is the information we had. And I believe I got in at this move here. Okay, so as you can see, the price was coming down. We had a heavy breakdown. If you're going short, where would you be getting in? You would be getting in at this fair value gap here. We had a strong break, and the price would be coming back into taking this fair value gap before it continues down to take that sell side liquidity that we talked about down here, and also the previous daily lows. That wouldn't have been a bad trade. However, I had a strong bias to the upside because of the reasons that we talked about earlier, and I wanted to get in on the long side. So what we saw here when the market opened, we saw this break of this previous intermediate high. Let's just quickly put that as buy side liquidity, and let's bring that here. So we had that buy side liquidity taken out here, and we also failed to break the previous lows here on sell side liquidity. So we had a break on the top, failed to break the bottom, and that was really interesting for me. I, however, got in before I saw the price not breaking the bottom of the move. And you'll be like, wouldn't you want to see that confirmation? Yes, but I have seen this price action a few times before, and I did want to get in case the price wasn't going to come down to take out pretty much this sell side liquidity, or even test really close to these lows. So I wanted to be in this trade, and that's why I got entered here. And my target was equilibrium. So from this point here, if we see how many pips was the target, 22, roughly 22 pips, and my stop was just below this sell side, so 3 pips stop if I was wrong. So I was quite happy. And when I say 3 pips, I would have, if I still was strong about the long position and I saw this sell side taken out and then screaming on the upside, and I saw another fair value gap, I would have also entered that trade. So I wouldn't kill my stop loss on the $3 on this case, on the 3 pips. So let's see what happens. So I entered here, and the level that I entered, if we go back onto the MT5, this is on 123656, and 1236. So this is the red line here, and then as you can see, the price came up, and I added a second position in here. Now my second position, this was 1 lot size on the bottom. This was half a lot size, and the reason is I want this initial entry to pay off if I'm wrong. I don't want to be building bigger size as I'm going into my profit, and that was the reason I went half size. So if it came down, I would add another half as long as my idea was holding. So as we can see, the price came down, filled another fair value gap completely, and this was quite interesting. So here I was about 300, let's see how many pips. I would have been, oh, that's not the one. From this entry to the top of this, 17 pips. So I was roughly $200 with the 0.5, $300 for my trade. And normally I would have killed that trade, but I did want to see how this is going to play out. So this original position, it took out sell side liquidity, and I added into that trade. So like I said before, it took out the sell side liquidity and then it screamed up, filled this fair value gap. This is a bit scary because you also have a break of structure here, is retasting the fair value gap, and it's coming down. That's why you have to be committed to your bias. Don't see this and be like, I'm going to go short now. I'm going to kill these trades and go short. You have to stick with your direction of your higher time frame bias. And luckily I did that, and I added into my position here, the other 0.5. When the price came here, I wasn't happy being so high up the chart. So this is a bit of my Yanis management, and I will throw you a little bit of a few tips on how I use my management. And if you watch most of the videos, then you will start piecing it together and you'll be able to manage your trades in a similar manner. So this 0.5, I closed it for, let's have a look. 0.5, I closed it for like 50p. I just wanted to get out. This is the trade from here to here. And I killed that. And that's not obviously for profit. It's just taking out a position that I'm not comfortable with. So if the price comes back down, I have to deal with this position and this position with those 3 pips in terms of my stop. So it went higher and then came all the way to TP, and I killed both of those trades. And normally what I would have done, like I said, I would have killed the trade here and I would have missed on the extra 5 pips. So instead of $300, I got my $447 or whatever it was. And super happy with that because, as we said, we had our first 10K month. What I would say about ICT and entering on the fair value gaps, I'm going to stress it one more time. If you had gone short here, let's go back to this level and see, because I think this would have been a very easy mistake to make, because it looked clean. It looked like the price was coming down, took out these lows and took out these lows. Okay, where would the directional move be? To take out sell side liquidity or the previous bottom daily low. And the market knows this, right? So even if you're in ICT, it knows that that's what you're thinking. So you're like, this is the move that the price is going to come and take liquidity here. But what you have on the left side here is all this buy side liquidity that's just sitting there. And this is buy side liquidity, and they're basically trailing their stops around the equilibrium and around below equilibrium. So the market, even though, look at this, the price now is coming down to the sell side liquidity, it came back to equilibrium just to get a better price. So people that got a better price took out all the stops from the that been trailing from this morning, or the Asian market, came down and then retested back into equilibrium, building more and more and more and more positions, and then delivering the price to the downside, which is highly likely is going to break the previous daily low for the close of the session, especially because we had the news as well. So this probably was it 1:30 UK time. So yeah, this was the spike back into equilibrium during the news. And you have to be aware of these. If you were going short here, you would have to be able to trade 20 pips in pain. So that's £200 and £300. On my account, even if my bias was short, I would be able to manage that. But if you're trading a smaller account, you need to be careful on where you're putting your stops, and how, if you wanted to go short, you would have to wait for the price to come back to equilibrium so you can get a better price. If you were not happy going long here, you could wait for this move to come and break the lows of this, and then see if it gives you an opportunity to go to the upper side. And this is really key to start thinking about, is what am I risking to get my my analysis and my to get my pips. And that's a better question on where should I enter, because the entry is very easy. You just click a button and you're in. But what is important is, how do I manage my account and my trade the best way? And I think making sure that you're not sitting in buy side liquidity or sell side liquidity, or if you're in the middle of equilibrium, look at the picture of what's happened in the morning session, in the London session. What has been the manipulation of the morning session? Has it created the high of the session? Has it taken out liquidity whilst it created the high of the session? And these are questions that you constantly have to ask yourself every time you look at the charts, because then you build and build and build your knowledge. And next time you see something, you don't have to have the perfect setup to get in, because then you know what you've seen from your historical data. And every trader is differently, and your mind needs to accumulate this knowledge. So when you look at the charts, it just becomes second nature. You don't doubt yourself. You see it and you'll have a clear plan on how to execute. If this has been helpful, make sure you like and subscribe this channel, because I really want to provide more of this content to you, and I will do that if I see interest. If you haven't checked the Fivers, I've done a Fivers interview on how I passed my 100K bootcamp, and this has been the last trade of this week. We do have one more trade on Monday to close the month, and I won't be taking any big risks. I definitely want to close this month with my sort of a 10K milestone, which I've never made before in any sort of job. And this is what Forex gives you, the ability to create this wealth for the prop firm, but also for yourself. And the splits are really, really generous on 75% profit. So for me, it's a no-brainer. If you haven't got a big account, do the bootcamp challenge, pass it, and then you get access to all this this capital that you can use. So until the next time, hope you enjoyed this one, and catch you next week.
Run it. I can't take no